Investors, have I got a program for you? Let's talk about that. Hello, everyone. Welcome to Brick by Brick, Building Home Ownership. I'm your host, Suzi Beaver. Investing in real estate can be a very promising income driver. As the old adage says, you can never go wrong with real estate. While property values can increase and decrease depending on the economy, it is a trusted way to build your net worth and have future income earnings once your loan is paid off. Building an investment portfolio can be tough when you're trying to build it solely on your W-2, your 1099, or your self-employed income, as you already have your own living and personal expenses depleting this income. To then add yet another investment property to your arsenal makes ratios super tight, and sometimes it may make it impossible to purchase that first investment property. I'd like to introduce you to the DSCR loan. DSCR stands for Debt Service Coverage Ratio loans. This loan type is for investment properties where the eligibility is based on the property's expected rental income, not your personal income. Basically, the loan's approval depends on whether the rental income is sufficient to cover the mortgage's debt service, which includes principal, interest, property taxes, homeowner's insurance, and an HOA if that's applicable. As with any non-government loan, the higher the credit score, the better the loan terms. As a lender, how I arrive at the property's DSCR ratio is by dividing the property's expected annual rental income, your net operating income, by the total annual debt service. We are looking for a DSCR ratio of 1 or higher, as this indicates that the rental income is enough to cover the mortgage payments. Again, no personal income or tax returns are required for this loan type. Who are these DSCR loan types perfect for? Well, your real estate investors for one, partnerships, as you can use this loan type to purchase through an LLC or a partnership, where there's more than one of you owning the property together. And last but not least, your out-of-state investors. You know, those who don't live in the current market they're looking to purchase in, but see the potential in investing in a strong rental market or an up-and-coming housing market away from the state that they are currently living in. Now, as with any loan, there are pros and cons to the DSCR loan as well. Some of the pros are, for investors, it is easier to qualify. You don't have to use your own personal income to qualify. The approval process is super quick. And I believe one of the coolest things is that it can be used to purchase multiple properties at one time. You're not just limited to buying just one investment property per year because that's what your income provides for. The cons are that they do typically require a higher down payment, such as 20% down. The interest rates are slightly higher than that of conventional loans. And in most cases, you will pay higher origination fees or even have a possibility of prepayment penalty fees. But this is to be expected as the risk is higher, since it's based solely on the income received to cover the debt of the new mortgage. So again, we are looking to make sure that the property in question generates enough income to cover its own costs. So if you're an investor looking to get into the rental and property ownership market, make sure to give us a call today. We can help you to align your finances to be prepared to enter this market successfully. And we have the right loan tools to help you achieve your financial goals. One of my favorite scriptures is Jeremiah 29:11. For I know the plans that I have for you, declares the Lord. Plans to prosper you and not to harm you. Plans to give you a hope and a future. Be sure to like, share, and subscribe. The more we get the word out, the more people we are able to educate and help them on their journey to home ownership. Thank you for joining us today on Brick by Brick, Building Home Ownership. Until next time, see you soon.